topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning, Florida. Welcome to another Ask the Expert show, where we bring you the top experts in the field of legal, health, financial, and home improvement. Hey, this is the first Monday of the month. That means it's time for our Provise Money Management show. This is probably one of our most popular shows. It's so popular, not only do we do one live show a month, but we do 2 live shows a month. Let me welcome our expert. The people are dying to hear what he has to say about money matters. Good morning, Ray Ferrara.
Good morning, Steve. And I hope they're not dying, but I hope they are interested.
We don't want them to do that.
Absolutely not.
Good to see you, Ray. And hey, we just finished the first 100 days, and people have questions about that. But first, tell people about Provise Money Management.
Sure. Steve, Provise Management Group is a financial planning and investment management firm with offices located in both Clearwater and Tampa, Florida. We're serving about 1,100 families scattered over 30 plus states and managing about $2 billion. And the cornerstone of what we do is financial planning first and foremost. We look at investment management, education planning, retirement planning, estate planning, asset protection, budgeting. All of that is a subset of the financial plan. And that's kind of the distinguishing feature between us and most other planning firms. We really believe in financial planning, not just gathering assets. And to that extent, can people be successful without a financial plan? Of course they can. But by having a plan, you increase the odds of your potential success. There isn't a business person that I can think of that doesn't have some form of a business plan. There isn't a doctor that I can think of that goes into the operating room without some type of a plan. The same with an attorney walking into a courtroom. And that's why we believe so much in planning. And of course, we always offer our potential clients a 1-hour complimentary consultation in either our Clearwater or Tampa office and or by Zoom if they would prefer to do it that way. So don't have to be in the Tampa Bay area. As I said, we've got clients scattered over 30 plus states. So reach out to us. The number is scrolling below at 800-633-3049, 800-633-3049, or learn more about us by simply going to provise.com.
Ray, I thought about you this week, and I was in my car listening to one of these national money managers, and I thought about our show because they promoted that they're on 4 of the top platforms in the United States. We are on 75 platforms, which makes this show so big. So many ways people have to listen to this show. And you've been with us almost 3 years now. And I got to tell you, people really enjoy your show. It's not something they listen to for 5 minutes. They cannot wait till the next question. We ask you if you would like to, on our chat line on YouTube, send us a question. Ray will be more than happy to answer it for you. Ray, as I said in the first part of the show, we just finished our first 100 days. So, what can we learn from that, and what should we expect going forward?
Well, clearly, the first 100 days is barely the beginning of a 4-year term. And generally, it's a very positive time for most presidents. There's a lot of enthusiasm about a person being elected, or in some cases reelected into office. Excitement either way of a new beginning, if you will. And usually the first 100 days results in some type of a positive result in the economy and in the markets. That's not been the case this time. In fact, the market is since inauguration day was down 8.6% at the end of the 100th day. The president this weekend said, well, that's a result of the Biden policies, not my policies. But let's face it, the turmoil of the past couple of months regarding inflation, tariffs, cuts in the government being threatened, the president now having come out with his upcoming budget for the 25-26 fiscal year, which will begin in October, has caused a great deal of chaos, haphazardness, and as I refer to it, self-inflicted wounds. Now, I'm the first person to look long-term. And so while I'm not happy about these past 100 days and the effects that it's had on clients' portfolios and on their lives and the anxiety that it's built in many places, I still play the long game. And so I think we have to look forward now, not backward, as to where do we go from here. A lot's going to happen over the next 100 days. The Congress has promised that they will get the bill out, the tax bill out by July 4th. As I've said on numerous occasions, I think that's still a very ambitious goal, but I'm hopeful that they do it. The pause that in the tariffs except on China, that the government that the president was going to impose will be over in about another 58 days. And hopefully during that next 2 months, almost 2 months, we'll get some clarity around what's actually going to happen. Maybe a couple of deals actually get done, or certainly at least the framework of those deals. I mean, these economic deals are not done in months. It often takes years for these to get done between countries. So I'm not expecting any firm deals. Be delighted if it happens, but not expecting any firm deals. But at least if we get a framework, it'll bring some certainty to what's going on. We still believe that the market will finish higher this year when it's all said and done with. And as we said at the beginning of the year, it's not going to be another 20% year. If we eke out a 5 to 8% return for this year, on top of the 20+ years that we had in 2023 and in 24, investors should be very happy. And we think as things begin to settle down on a little longer term basis, not just over the next 100 days, but the rest of the year, we think that some stability will come back into play. So I don't want to say that we're Pollyannish or eternally optimistic, but that's the way we're investing our clients' portfolios at the moment. More volatility, more chaos over the next couple of months, but things will begin to settle down.
So the Fed's meeting this week, is that right?
It is. It is indeed.
Okay. Any chance of a rate cut?
No way. There is no way. I can't visualize the scenario under which the Fed cuts. I think that it will I think that they will come out on Wednesday in the press conference and say that they are pleased with the direction that inflation is going. It's getting closer to their 2% target, particularly with the cost of energy coming down as much as it has, with oil having dropped significantly off of $81 a barrel, and now in some cases the high 50s, but in most areas today somewhere in the low 60s. I think that they'll go on to say that they still need to understand policy both at the tax level and at the tariff level before they look to make any cuts. They have two mandates. Obviously, one is on inflation, and we're moving towards their target. A little bit of slowness occurring the last couple of months, but that's to be expected. It's very hard to wring inflation out of the economy. We all learned that in the 70s, where it took almost a decade to get that to happen. And then the other mandate is employment. And at the moment, employment is good. It's not robust the way it was 6 months ago, but it's good. And in light of everything that's going on and the disruption that has occurred, I think the economy is strong enough at the moment that the Fed is not going to reduce rates at this upcoming meeting. Now, having said that, that leads us into, well, if they don't reduce rates, and the president's been calling for rate cuts, does he go back on the attack regarding Chairman Powell? And I don't see how he doesn't. If things don't work out, the president would love to have a scapegoat, and then he can blame the chairman for not having lowered the rates. It wasn't my fault. I did everything I could to fix things. And on the other hand, if things go well going forward, then of course the president will take the credit for it and forget about what the Fed didn't do, or he's able to say, in spite of the Fed, we were able to recreate the economy. A lot of folks have said, well, won't all of this lead to a recession before it's all over? Certainly it could, but it's unlikely that that's going to happen. The second quarter should shape up to have a small amount of growth after a minus 0.3% decline in the first quarter of the year. That's the initial estimate. Again, let's take the long view. I've been touting America for a long time, right alongside of Warren Buffett. I've been at it for 54 years, Steve. He's been at it for about 65 years, 70 years. But we both have a great faith in the American free enterprise system and its economy, and this too shall pass. And that's why people need to be thinking long-term, not short-term.
We got a text from Kyle in Tampa, in your backyard. He said, I love your show. I keep hearing China manufacturing is shutting down and that China is in real trouble. Do you see China coming to the table sooner than later?
So China's economy is very much manufacturing based and very much export based. They have to be able to export not just to the United States, but around the world. And there is more pressure on them at the moment than there is on us. Their economy is growing at the slowest rate that I can remember in the last 20 years. Still growing, but growing much more shallow than the government there would like. And so I do suspect that there will begin to be informal conversations. Neither of the economic superpowers let alone military superpowers, want to blink before the other. So they need to find some common ground where they both can save face. The key here in our mind is going to be whether the American consumer is willing to accept that there are going to be things that we won't have as much of, and that probably will cost a little bit more coming out of China than it had in the past. And as long as the will of the American people are willing to sustain itself, then it's likely that China will blink first and move towards talks with the United States. The other thing that's important to understand about China is its real estate. Historically, the Chinese investors have bought up real estate that was subsidized by the government. When I was in China about 10 years ago, and I was coming back from the airport late one night, and along the superhighway leading back into Beijing, there were these huge condominium buildings that were there. And Steve, not 10% of the lights in those buildings were on. It was property that was owned, but nobody was living there. And you know, there's no good economic outcome for real estate that's being unused, either to be residential or something that's rental. And that is really collapsing on China right now. And that is a significant problem. People wonder why the cost of gold is going up. It's going up because one of the things that exists is that the Asian culture, and particularly the Chinese culture, is to own gold in turbulent times. And they've been buying up gold at a rapid rate because they don't know what else to do with their money. So I think there's more pressure on China than there is on us. That said, unlike us, where we will have another election in 3.5 years, China doesn't have elections. So the government is not under the pressure of the electorate to change. And that does allow them to drag their feet a little more. But at the end of the day, I think China comes to the table.
That's good news. We've had many corporate earnings already announced for the first quarter. Ray, how do you evaluate where the market is today? Because people still want to know, is it time to buy or sell? And I love your analogy that you give almost every show.
Well, Steve, the fact is that the earnings and more, as importantly, the revenue estimates that most of the analysts had coming into the earnings at the beginning of April have been better than expected in many cases. As an example, if you look at the Mag 7 that suffered a great deal in this turmoil over the last few months, every one of the Mag 7, with the exception of Tesla, beat the bottom line, and in most cases beat the revenue numbers. And so we've seen a nice bounce back in the Mag 7. The last couple of weeks have healed a lot of what happened earlier in the year. At one point, the Dow was down, the S&P 500 was down about 15% for the year and down almost 20% from its all-time high in early February. Today, the S&P 500 is down about 5% from the beginning of the year. So a lot of healing that has occurred as things have stepped into reality. We think the earnings are going to continue to be good through the rest of this over the next couple of weeks. And then we'll all start focusing on, well, what are the earnings going to be for the second quarter? Because much of that first quarter was turmoil in the markets, but not turmoil in the businesses. And now we're going to see what the turmoil in the businesses are going to look like into the second quarter. And is it time to buy or sell? The answer is yes. It's time to do both. It's time to sell those things that you don't think are going to continue to increase over the next couple of years, and time to buy those that you do. It is very much a stock picker's market right now, trying to determine where that long-term value is on a go forward basis. So it's a good time to clean up your portfolio, get rid of those laggards or those that you don't think are going to continue to be as robust in the future. The good news is that when we look at the market, a lot of that growth was due to multiple expansion, selling at about 22 times earnings. Right now, the market is about 19 and a half times earnings. So it's come closer to its averages. And I think that makes it a better market today than it was 100 days ago. So carefully make some good selections and let your winners run and cut your losers.
Ray, I saw a TV show yesterday. It talked about investing in the stock market and the investments that can never go down. How do they do that?
There is a product known as a fixed indexed annuity that guarantees, an insurance company backs it, guarantees that the portfolio will not decrease in value from year to year, but it doesn't guarantee what the earnings might be. Now, it sounds really good to think, well, I can never lose money, therefore I can only make money. But right. The problem is that these companies often, while guaranteeing the downside, don't give you the entire upside. For instance, we talked earlier about in 22 and 23, the market was up 20 plus % both of those years. People in those fixed indexed annuities did not enjoy all of that. Most of the fixed income annuities have a cap on what the growth side will be. Often it's in the 8 to 10% range. So while the portfolio can't go down, it also can't go up with the market. And so now you want the analogy that I always talk about, the man walking up a flight of stairs with a yo-yo. Yes, there's a lot of volatility in the market with the yo-yo going up and down, and that causes us to lose sight of the fact that the man is walking up a flight of stairs. Clearly, a product like a fixed index annuity is appropriate in some situations with part of one's portfolio. But the problem I have with these folks that are on TV and touting the fact that your portfolio can never go down, these products are full of high commissions, high surrender charges, and the advice that you get is to put 100% of your money into that, or virtually all of your money into these types of products. That is not the thing to do, in our opinion. And just respectfully, that's the advice they're giving, but it's not the advice that we give at Provise. And so if you have a fixed income annuity and you'd like to get a second opinion, take advantage of our complimentary 1-hour consultation in either our Clearwater or Tampa office or by Zoom. And all you have to do is call our phone number at 800-633-3049. That's 800-633-3049. And we'll be happy to schedule a 1-hour complimentary consultation.
This is a great text to end on. This is from St. Petersburg. Ray, very familiar name. He wants to know, do you handle business by Zoom if a person is out of state?
The answer is yes. We've actually been using Zoom and some of its other forerunners now for close to a dozen years. It has been a great way for us to expand our business over time, and that's why we're in one of the reasons why we're in 30 plus states. Also, a lot of people don't or can't travel, even when they're in the Tampa Bay area, like you, Ray, and St. Pete. And so we are more than happy to do business via Zoom. Obviously, it's always nice to see people in person, and it's the preferred way to do it. But it's also we also recognize that it can't happen with everybody. So short answer, yes, happy to visit with you by Zoom.
Ray, how do people get a hold of you again?
Give us a call at 1-800-633-3049, 1-800-633-3049. Or if you just want to learn more about us, go to provise.com. That's PROVISE.com.
Ray, another great show. You'll be back with us in 2 weeks. And people can also go to iHeart under Ask the Experts, Money Management, Florida, and they can repeat today's show. Ray, we'll see you in 2 weeks.
Take care. Be well.
Thank you, Ray. And that's does it for us today. We'll be back again with you next week with more Ask the Experts.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.